Hello everyone, George DeSantis here with a look at the market for the week ending Friday the 10th of April 2020. Although Friday was Good Friday, so there wasn't any trading. So the week was a shorter week. And before we take a look at the market, I would like to wish everyone a happy Easter. Today's Easter Sunday, and also happy Passover for those who of the Jewish faith. And so let me explain that for those who are new, this is a review of the market that I usually do on a weekend, with some exceptions, of course. And what we do is I try to review the general market using the S&P as a guide for that, and then take a look at some individual stocks, time permitting. We have a 15-minute period to do these videos in. So before we go any further, let's bring up this disclaimer. The disclaimer clearly states that I'm not an investment advisor, and therefore I'm a psychologist, and therefore if you need investment advice, you seek that from someone who is so qualified. I do this for my own purposes, and I make a video of it and post it on YouTube, and anyone can take a look. It's purely for educational purposes, for all of us to learn something from it if we can. So we'll begin by taking a look at some charts and look at the S&P, the weekly chart of the S&P first. So here's a chart of the S&P, the weekly chart of the S&P, and let's take a look and see what we got here. As usual, we'll start with the moving averages. So the 4 exponential moving averages, it's this yellow line. It's just bumping up against a 200-day moving average, which is, well, 200 week in this case, which is this white line. And that's sitting right at the 50% retracement of this move, the Fibonacci retracement of this move from this high here to this low. The other thing we see is that the 9 exponential moving average, this red line, is still below the 30 weighted moving average. For a long-term trend, I would want to see this 9 exponential moving average above the 30 weighted moving average, but that's another story. Right now, what we are seeing here, insofar as candlesticks are concerned, you will notice that we came down here, we came all the way down, and we found support here at this level. Then we had a bullish engulfing candle. That was followed by a small bodied candle. It wasn't quite a bullish harami because it wasn't really within the body of this candle here. This body of this candle didn't totally engulf this. It's a little bit out of whack there. In any case, last week we have this nice bullish candle. And as you can see, the parabolic is now below this candle. The parabolic indicator is the parabolic SAR, stop and reverse. So whereas we had a downtrend being indicated by the parabolic here, now we have an uptrend being indicated by the parabolic. Let's take a look at the MACD. You can see that MACD histogram has been trending down, sort of leveled off here, and now the histogram is a shorter one here. So it seems as though, consistent with this uptrend here, MACD is now trending up from below the 0 line, which is always a bullish indication. Now, if we go down to one of my favorite indicators, that Williams percentile with the 30-day period, you can see that since Williams percentile crossed below the magenta line right here, it remained below, and now it's indicating the possibility of a cross back above it. On the daily chart, we'll see that it's already crossed above it, daily chart being a shorter term, and insofar as the sum of the rate of change indicator, a similar situation. And on the daily chart, you'll see that that too has crossed above the 4% line. As far as stochastic is concerned, stochastic was oversold here for quite a while, and now it's trending up. So insofar as the weekly chart is concerned, we have a switch from a downtrend to uptrend. The big question is, how far will this trend will go, and how long will it last? And that's something which, we wish we had the answer to, of course. Anyway, let's take a look at the daily chart. So here's a daily chart of the S&P 500, one we've always looked at. And let's take a look again. Where are the moving averages? Well, the 4 EMA, let me open it up a little bit. The 4 EMA, the yellow line here, has crossed above the 9. It crossed above it here and then sort of wobbled a bit in this area. And now it's crossed above it again. And the 4 is crossed above the 9, and the 9 is now above the 30. So we have what one technician refers to as the alligator opening its mouth, and it's asking to be fed, and that means it's asking you to buy stocks, okay? So insofar as moving averages are concerned, we have an uptrend again, and you can see, look at the parabolic. Parabolic switched right here, saying, folks, we have a beginning of an uptrend. And on the daily chart, it never went above the bars since. It hasn't done that. So, I started using these parameters on the parabolic SAR some time ago after reading an article in Stocks and Commodities. One of the authors spoke about changing the parameters to these. And so it seems to more closely follow the trend. It's a better indication of the trend than the previous parameters. In any case, as Alex would say, in any case, let's go on. He has a penchant for saying in any case. What else do we see? This is a squeeze of the parabolic of the Bollinger Bands. You can see that we had a wide gap here between the Bollinger Bands, and now we have a squeeze that seems to be opening up. Again. And if that's the case, and if we are really experiencing an uptrend here now, then price should continue to rise. This 3 standard deviation line should continue to go higher, and price should continue to ride that upper Bollinger Band. Let's look at MACD histogram. You could see that right here, MACD histogram became bullish. The green bar, right? The green histogram. So you can see that right here it became bullish, and it's remained bullish. It's above the 0 line, and it's trending up. My favorite indicator, one of my favorites, Williams percent R, it crossed below the magenta line here at the very beginning of this trend. Now you know why I like it. And for the first time, it crossed above it again. So since this downtrend began, this percent R has been below the magenta line, the -50 line, and now it crossed above it for the first time. So is that an indication of a real change in direction of the trend? Perhaps. Time will determine that. And as I mentioned before, the sum of the rate of change indicator also crossed above the 4% line for the first time since this market broke down. So all of these on the daily chart also indicating an uptrend. So let's look at some of the charts. Let's look at a daily chart of the S&P on the chart that one of the charts Jake Bernstein seems to use. What we see is that one of his criteria is for buying the market, anything, a stock or the index, is that 2 complete bars have to be above this 10-week, in this case, 10-day moving average of the highs. And we do have 3 of them, but we don't have the trigger yet, which is a bit disconcerting. We don't have this accumulation distribution line, Larry Williams accumulation distribution indicator. We don't have it above that 57-day moving average. So that gives me a little room for pause here, Anyway, that's just one indication. So on the Ishimoku cloud chart, you can see that price bars are still way below the cloud, and the cloud is trending down. So that again is giving you a little reason for pause here, and don't get too bullish. In other words, I'm looking to see what could go wrong, and is there any indication of that, of this uptrend pausing and reversing. So I'm not sure that this is any indication of that yet, but I just wanted to show it to you. So let's take a look at a quick look at some of these charts on stockcharts.com. The first one is this chart that Alex pointed out to us some time ago. He said, look, when this new high new low index spikes down and crosses back above minus 4,000, you have the beginning of a nice uptrend again. And if you want to see how that happened back at the end of 2018, we had the same thing happening here. See, we had the same thing happening here, and when it crossed above 4,000, the market took off again. And so this is exactly what we're going through right now. And we might just have the beginning of a beautiful uptrend here. We don't know yet. Time will tell. Here's the chart of the S&P, a daily chart showing the impulse indicator. You can see that the bars are now all green for the last 4 weeks. Actually, this is a daily chart. So for the last 4 days have been green. It simply means, a green bar simply means that we are not allowed to go short, to sell the market short. We are allowed to go long or hold what we have. So it's not allowing us to go short here, and that's a bullish indication. Here's the percentage of stocks of the S&P 100 above their 200-day moving average. You could see that it came all the way down and has been trending up. It hasn't crossed above that 50% mark yet. We'd like to see that, but it's on its way. So let's go to Shaken Analytics and take a look at some ETFs and individual stocks. Here's a list of the 11 or so ETFs, the SPDR ETFs, and you can see the top rated ones are up here, and you can see XLC, which is communications. Let me click on it. Communications, technology, staples, consumer staples. But notice what is characteristic of each one of them is that they're overbought at this time, because of course the market's been rallying. XLU, they're all overbought now. So if you're really interested in ETFs, you can buy them here or wait a while and see if they become oversold, any particular one. Let's take a look at a few other ones. So on Shaken Analytics again, we can see I have a couple of lists here. Here's one of a list of 50 stocks by Fortune, I believe, Fortune magazine. And let's take a look at some of them. You'll see Amazon, for example. What I'm finding is most of these stocks are overbought now. So whether I want to buy them here or not, I would prefer to buy them when they're oversold in this region here. So let's take a look at some of them. For example, Apple. Apple is overbought. You could see, just pay attention to this line here. Accenture, overbought. These are good stocks, but they're looking overbought. Now, Adobe came down a bit, and so I want to keep an eye on that one. Here's Salesforce. Salesforce was overbought, but now it seems to be ticking up a little bit. So I'll take note of that one. That's CRM. But many of them are overbought, so you don't want to be buying them right here. That was CVS. Now here's Delta Airlines, but the airlines I wouldn't touch at this time. Here's IBM, overbought. Lockheed Martin, overbought. Merck is overbought. Microsoft, overbought. These are all stocks that are good companies. BRK. Berkshire, overbought, had a nice run up recently. Costco, I bought some shares. Well, it's now trending up a little again, but I have Costco. Goldman Sachs. Yeah. So I just wanted to let you see some of these stocks. We don't have much time left. Need to say goodbye. Happy Easter again, and have a good day. Bye-bye.